July 18th, good morning. Today's editorial is entitled The Credit Cycle. When the Fed raised its key rate from a record low back in December of 2015, a change in trend was assured. This trend is not about to change, irregardless of the numerous protests. The Federal Reserve is bluffing. They are not. Domestic policy initiatives favor capital inflows to the United States. Inflows have indeed remained robust. The dollar should rise, but is struggling. How long this period of consolidation for the dollar continues is curious. It has the appearance of being extremely weak. 93 remains my target for the dollar. This could provide immense support or a spectacular failure, one that, should the dollar fail, returns the dollar to the 70s on an exchange basis. The Federal Reserve has kept their word. For them to sit pat, continued asset inflation would be difficult. This appears counterintuitive. It is not. Continued zero interest rate policy served its purpose until it was no longer effective. The pendulum is swinging back. Much has been made of calling the Fed on their bluff. 3 increases to the Fed funds rate later, and there is no sign they are about to halt and reverse direction. Mario Draghi and the European Central Bank will come under pressure in maintaining negative interest rates that have failed to reinvigorate the European economy. 8 years of economic policy has failed spectacularly and would seem to demand Europe's pendulum begin to swing back to rate normalization. The note of caution by Federal Reserve Board members have not deterred 25 basis point rate hikes. Economic activity has contracted significantly since they began raising rates. What is to lead us to believe they're about to reverse course? The small gang of forecasters who couldn't shoot straight from the inception of this change in trend? The Fed's flip-flop. Good cop, bad cop routine? Economic contraction? Did this prevent them from prior increases? The dollar will begin to drop when the European Central Bank begins to reverse course. Until then, it will either tread water above 93 or fail dramatically to the 70s once we have a clearer picture from Euroland. I remain negative on the precious metals complex. This most recent retracement is weak, underwhelming, and has the appearance of building stored energy for the next decline. For things to look up would require gold remain firmly above 1237 for 5 to 10 trading days. Silver will require a move over 1650, one that holds for the same time frame. Were purchasing power parity truly at risk of a serious decline, silver would be leading. It is not. Is this a trick, a distraction, or a ruse? I suspect we will find out shortly. Have a great day.